Hello and welcome to ABiQ's webinar in June, and we have our next session looking at Islamic finance, Islamic banking in Africa. And as always, I'm delighted to have with me Mufti Ismail Dessai, who is the CEO of GIFS, and I'll hand over immediately to him for introduction and then kicking off today's session. So without any further ado, Ismail, if you can continue.
Thank you very much, Emil, for your kind introduction. So I would like to take this opportunity to thank the management of ABiQ and you, the participants, for attending this exclusive webinar and presentation on Islamic banking in Africa. Essentially, today's discussion will cover two elements. The first is a brief presentation around Islamic banking and Islamic banking in Africa, the opportunities, the challenges, and we will then have a separate question and answer session. So we now move over to the slide presentation. And we move over to the first topic of discussion, which is our credentials. So GIFS has been involved, or Global Islamic Financial Services has been involved in various transactions, including the Ethica Institute of Islamic Finance, where we developed the Islamic finance models and trained over 130,000 members. We also assisted the Botswana Life Insurance Company, which is the largest insurer in Botswana, to develop the first ever Shariah compliant investment vehicle. We've also established the Hijaz Financial Services, which is the largest Islamic finance entity in the Australasia region. And we advise several governments and central banks on Islamic finance. Next slide. We've also structured various unique products in the market, including developing several Sharia compliant real estate and asset management funds, some of which have won several awards. We've also trained various bankers in the Middle East and elsewhere, and we've advised several governments on Islamic bond or Sukuk funding. Next slide. Next slide. So these are some of the services that GIFS provides in terms of Sharia product development, fatwa and certification, Sharia review, Sharia audit, Islamic private wealth management, etc. Next slide. So this is our motto: embracing Islamic finance through Sharia compliance, achieving new heights in expansion and growth. Next slide. So we now move to the actual discussion for today. And we'll start off with explaining some of the basic principles of Islamic finance. We have done this in previous webinars, but just to reiterate for any participants who may have joined today for the first time. So essentially, an Islamic finance transaction is asset-backed. So the transactions must be backed by tangible assets. There is a prohibition of the payment and receipt of interest. And there is a prohibition of certain activities which are considered harmful to the society, which are mainly sin activities. There is a prohibition of gharar, uncertainty, and gambling. So the subject of the contract must exist. It must be specifiable and measurable. Speculative trading in financial instruments is prohibited. So in other words, a life policy is not permitted because there is a level of uncertainty and gambling involved. So if you paid a premium to insure your life, then we don't know whether you'll pass away today or tomorrow or in the next 1 year. And there's an element of gambling because if you only paid a premium of, let's say, $1,000, but you passed on the next day and you cashed out a $10 million policy, that is an element of gambling. And then one of the most important points, perhaps in Islamic finance, is that there is a element of profit and loss sharing. And this follows the hadith of Rasulullah sallallahu alaihi wasallam, or the Prophet Muhammad, in which he said that al-ghunmu bil-ghurmi. In other words, that a benefit can only be gained through taking risk. If you do not take risk, then you would not gain a benefit. So the bank will act as an agent with the depositor who is entitled to receive the share of the loss or gain of an investment. So just as you can make a profit, equally you should also be prepared to take a loss. These are some of the fundamentals of Islamic finance or Islamic banking. Next slide. So again, here, these are some of the general Sharia guidelines, that there is a prohibition of interest, trading between the parties is acceptable, there's a prohibition of gambling, there's an avoidance of risky transactions, and there's a sharing of risk between the parties. Next slide. So this is a snapshot of the difference between Islamic banking and conventional banking. So as you can see, in conventional banking, you have the amount financed, which is, let's say, $10,000. In Islamic banking, you wouldn't say the amount financed, but you would say the purchase price. So I've always explained to students that when we talk of Islamic banking, we talk of Islamic trading per se. We don't talk of banking per se, because it is essentially purchase and sale of items under murabaha transaction. So it is not an amount financed or an amount loaned. So the difference can be explained in a more clearer example. So if you have two chickens, both chickens look exactly the same. They have feathers. They both have been slaughtered. But why is it that one is halal and one is not halal? It is because that one is slaughtered in the name of God, in the name of Allah, and the other was not slaughtered in the name of God or in the name of Allah. So one is permissible to eat and one is impermissible to eat, but yet they both look the same. So it is the mechanism that we reach that differentiates between whether a product is Sharia compliant or not Sharia compliant. So the statement that Islamic banking or Islamic finance is only smoke and screens, it is not really Sharia compliant, that is incorrect and unfounded, because the very definition of an Islamic banking contract or an Islamic financial contract is totally differentiated between a conventional banking contract. And as you can see here, we say the amount financed, the interest rate, and you say the installment. And the installment or the rate could also be based on a floating rate. But if you look at on the Islamic banking side, you say the tenor, the installment, and the selling price. So we have the purchase price and the selling price. So this is the major difference between Islamic banking and conventional banking, that Islamic banking engages in active real transactions where there is no interest on a loan involved. Next slide. So this is a snapshot really of how an Islamic bank would work. So as you can see, in the Islamic bank, we have the depositors who will deposit funds under either a mudaraba transaction or a wadi'a transaction. So a mudaraba refers to a profit sharing mechanism, and the wadi'a refers to a trust where the funds are entrusted to the bank. The bank can then use those funds to place them into money market accounts, investments accounts, or certain financing transactions. And you would also have shareholders that would also place funds into the bank, and those funds would then be used to fund other transactions. So this is a snapshot really of how an Islamic bank would work. Next slide. So the big question is, why is Islamic banking growing, and what is spurring the growth of Islamic banking? So Islamic banking is essentially asset-backed transactions, as opposed to simply lending on paper in conventional banking. The products that are produced and distributed by Islamic banks are generally more prudent or financially prudent products, in that they are more responsible. And Islamic banks would generally fund more stable and sustainable economic activities. So in other words, it is the funding of actual assets and services, as opposed to simply funding paper transactions or commercial securities, and Islamic banking refers to funding or financing of more stable and sustainable economic activities. There is also a real demand from customers as the awareness of Islamic banking increases. So customers are also attracted to Islamic banking due to more fairer terms and conditions. There is a simplicity in the products, and there is more religious inclination from an Islamic finance perspective to be Sharia compliant in one's financial dealings. And we are seeing that a lot of non-Muslims also are taking up Islamic banking because they find Islamic banking to be more ethical, more simplified, and more fairer. So they subscribe to the underlying ethical principles of Islamic banking, as opposed to simply Muslims only subscribing to Islamic banking. So Islamic banking is not only for Muslims, it is also for non-Muslims. Now, how is Islamic banking conducted globally? So there are three types of Islamic banks. You have the Islamic windows or windows of operations, which essentially refers to a division within a conventional bank that operates as an Islamic banking window. You would also have an Islamic banking subsidiary, which is essentially a separate entity or a subsidiary of a conventional bank that engages in Islamic banking. And then you would have a fully fledged Islamic banking. So these are the three different forms of Islamic banking. In certain countries like Kuwait, etc., you could only have a fully fledged Islamic bank, and a subsidiary or window would be disallowed. So when we look at Islamic banking in Africa, the continent has a Muslim population of approximately 636 million, representing almost 53% of the African continent. So this is a substantial population of Muslims on the African continent who are Muslim. The Muslim population in sub-Saharan Africa is projected to grow by nearly 60% from 242 million in 2010 to 385 million by 2030. Furthermore, a vast infrastructure development deficit creates financing needs towards which Islamic finance could make a significant contribution. So there is a huge demand for infrastructure funding requirements across Africa, and there remains a huge opportunity for Islamic banking or Islamic banking penetration in Africa, with almost over 50% of the population being Muslim. Next slide. So when we talk of Islamic banking in Africa, let's take a few numbers. Sudan has 100% Islamic banking, with Djibouti at 20% of Islamic banking assets. You have several other countries that have Islamic banks like Egypt, Nigeria, Somalia, Morocco, and various other African countries that have also instituted amendments to the tax and legal frameworks for Islamic banking. For example, in Nigeria, the tax framework has been amended for Islamic banking. In Kenya, it's been amended. In South Africa, it's been amended. And various other countries, we find that laws are being enacted to promote Islamic banking. And this will only increase as the awareness for Islamic banking grows. So we are on the cusp of huge and dramatic growth for Islamic banking in Africa for the next 5 to 10 years. And what will drive Islamic banking in Africa really is disruption through fintech. If we can harness the power of fintech so that there could be mass adoption of Islamic banking at a mass scale across the African continent, then we would see huge development of Islamic banking and finance across the African continent. There are more than 250 Islamic financial institutions across the African continent. And one example is GIFS Bank, which had achieved a growth rate of over 500% in assets, with over 230,000 customers and 33 branches in Nigeria. Now, this is a standalone bank that went into the Nigerian market and has done fantastically well. There remains a huge opportunity for Islamic banks to set up in Nigeria, given the huge Muslim population and growing demand. Nigeria has facilitated the issuance of Sukuk by amending its securities regulation, and the state of Osun in Nigeria sold $61 million of Sukuk in 2013, becoming the first state in Nigeria to sell Sukuk. Subsequently, the Nigerian government has issued several Sukuk amounting to just over $100 million. South Africa's National Treasury intends to make the country as a hub for Islamic finance. And if you look at South Africa, there are 4 Islamic banks that are Sharia, that have Islamic banking windows, and you have the South African government that issued its first Sukuk in the 3rd quarter of 2014, and the $500 million Sukuk was oversubscribed by more than 4 times and did attract Middle Eastern and Asian investors. In West Africa, Senegal launched a 4-year $175 million Sukuk in June 2014. And Senegal may also consider additional Sukuk issuances to support the country's infrastructure needs. And Dakar is aiming to position itself as the continent's hub for Islamic finance. If you look at the Ivory Coast, it also issued Sukuk of 150 billion francs at a profit rate of 5.75 in the last quarter of 2015. In East Africa, the government of Uganda has approved the Financial Institutions Amendment Bill, paving the way for Islamic banking and finance in the country. Kenya also has its sights on becoming an Islamic finance hub of the East Africa region, with 2 fully fledged Sharia-compliant banks in operation, licensed takaful and re-takaful businesses, and a number of financial institutions offering products that comply with Islamic law. So you can see that Islamic banking is gaining traction in Africa, and various countries like Uganda, etc., have enacted bills to pave the way for Islamic banking and finance in those respective countries. Next slide. So what are some of the basic Islamic banking products? So essentially, the fundamental conventional banking products can be replicated for Sharia compliance. That is a current account, a home finance product. You can have a treasury deposit product, savings and term deposit, personal finance products, trade finance, murabaha product, FEC and FX products, vehicle and asset finance products, LC and bill of exchange products. So these are some of the products that can be introduced for Islamic banking into Islamic banks. Next slide. So how do we develop a Sharia product or an Islamic banking product? How is an Islamic banking product developed? What are the processes involved? What is required, etc. So just in brief, you have the idea and the concept that needs to be Sharia compliant. So in other words, that if we are developing a product, let's say, for example, an Islamic home finance product, then we need to look at which concept we consider, whether that concept is an ijara concept, a diminishing ijara concept, diminishing musharaka concept. Which concept are we considering in order to ensure that we have the correct Sharia compliant concept? Secondly is in terms of the market research. That is, there should be proper market research that is done in the Muslim community to ensure that the correct product is being delivered. Thirdly is there should be a proper business case around it. Fourthly is you would have what is called a fatwa or a structure, where the a group of Islamic scholars will then issue an Islamic legal edict authorizing the usage of that Sharia compliant construct. You would then have the stakeholder involvement and also compliance and credit parameters introduced into such a product. So these are some of the basic steps in terms of developing a Sharia compliant banking product. In general, it takes approximately a month or so to construct the fundamentals of an Islamic banking product. However, such a timeline may differ based on regulatory and compliance requirements, etc. What we've typically seen is that in jurisdictions where the law, whether it is the legal or tax framework, does not accommodate for Islamic banking products, that it could take a little while longer to effect such a product. However, we at GIFS have developed such products, Islamic banking products, in compliance with the local law and also in compliance with Sharia law. So this is important to note that even if the law has not been enacted for Sharia compliant products, that it is possible to also develop Islamic banking products. And perhaps one method that we've seen work tremendously well is where GIFS or certain other global Sharia firms are able to partner with banks to develop suitable Islamic banking products so that the Muslim community can benefit by having a Sharia compliant suite of banking and financial services products. Next slide. So what are some of the key challenges and opportunities? So some of the key challenges include the fact that there is a clear lack of human capital. And what I mean by this is that there is a clear lack of human capital in Islamic banking and finance of suitably qualified professionals who understand both banking from a conventional perspective and also from a Sharia banking perspective. Because you can have the knowledge of Sharia banking, but if you do not understand the conventional banking methodology and construct, then it's extremely difficult to then develop suitable products and also engage in a constructive manner to advance the cause of the industry. There's also a lack of Sharia standardization, harmonization. So, differences of opinion from a fiqhi or jurisprudential perspective would always be there, but there should be some level of standardization and harmonization of such Sharia financial standards so that the industry speaks almost with the same voice. And you have certain, bodies like in the UAE, United Arab Emirates, in Malaysia, etc., where you have a central Sharia board that is then tasked to standardize Sharia standards and create a single voice for the industry. This, I think, is a very good move and is something that we welcome and we also encourage so that there is greater credibility and transparency of the Islamic finance industry. There's a lack of public awareness, so a lot more needs to be done around the scholars, the ulama, and professionals, providing suitable education and awareness around Islamic finance. There's a clear lack of a Sharia legal framework. And also from a regulatory and supervision perspective, the regulators need to be involved around Islamic banking so that there's clear transparency between the public and private sector. And then in terms of the monetary policy and liquidity management, there are certain MPC tools or monetary policy and liquidity tools that need to be developed from a public and regulatory institutional perspective. So what I mean by this is that Islamic banks would deposit their funds with the Reserve Bank for regulatory capital requirements, should have a suitable Sharia compliant treasury solution where they could earn a return on those funds. So this is important to also look at creating an Islamic lender of last resort, so that the Islamic lender of last resort could be made available in the event of certain liquidity issues. Also, the tax policy. We've seen certain tax policies being amended now for Islamic finance, but much more needs to be done to ensure that there's greater parity between conventional and Islamic banking. And lastly is in terms of looking at having a benchmark rate for Islamic finance. We all know and we're all aware that the LIBOR rate would be done away with by the Bank of England. And essentially there would now be daily rates. So what if we could have an Islamic benchmark rate as opposed to having a conventional KIBOR or LIBOR rate? So these are some of the challenges, but they also present opportunities in terms of further advancing the cause of Islamic finance. I would also say that perhaps one of the greatest opportunity for Islamic finance in Africa is Islamic fintech, and through the use of fintech, we could clearly democratize and disrupt, the archaic banking system to create a more suitable, transparent, and efficient Islamic financial services sector, because the the question and the objection has always been that the service in Islamic financial services or the level of service for potential clients of Islamic products has been very poor. And secondly is that to what level have we democratized Islamic banking and financial services to the masses and the poor? And this is where a lot more needs to be done. And perhaps Islamic fintechs holds a great opportunity for us to tap into that and disrupt the industry. Next slide. So where are the key frontiers for growth in Islamic banking? So if you look at the African continent, I would like to earmark these countries where I believe we believe that there's huge opportunity for growth in Islamic banking. So that would include Uganda, Ghana, Malawi, Mauritius, Tanzania, Angola, and Cameroon. So if you look at all of these countries have a huge Muslim population. And we've seen in certain of these countries, like in Malawi, where we advise the Reserve Bank, if you look at Uganda, where a law was enacted for Islamic banking, that there is a push from the regulatory side to develop Islamic banking guidelines. So perhaps we need a lot more awareness in these countries where there's sizable Muslim populations, by the way, to adopt Islamic banking and finance. And this perhaps can only come from two ways. One is it can come from the scholarly fraternity from the ulama and the scholarly organizations that will promote Islamic banking. And second is from the professional sector or professionals from within the Muslim community who would promote Islamic banking and create public awareness around Islamic banking. And certainly with our experiences that there is a huge demand for Islamic banking and financial services from the Muslim community, where they understand and they know that interest is impermissible and they have to adopt Sharia banking in order to ensure that their dealings are Sharia compliant. Next slide. So let's take a simple case study of Islamic banking in Africa. So if you look at South Africa, there are 4 Islamic banking operations, or 4 Islamic banking institutions, and there's one fully fledged Islamic bank, which is Al Baraka Bank. You have approximately 40 billion rands of deposits, which is close to $3 billion of deposits, and close to 35 billion rand in listed investments. And approximately 50 billion rands, which is approximately just over $3 billion in private investments. And there are close to 50 asset managers that offer Sharia compliant products. And there are also there's also one insurer, that is Bright, that provides takaful or Islamic indemnification or Islamic insurance, with the premium being approximately 300 to 500 million rands on a yearly basis. This is essentially a quick case study of Islamic banking in South Africa as an example for the broader continent. So really, in a short space of time, Islamic banking assets in South Africa has dramatically increased, and the same could be said for other countries where there's a huge opportunity for Islamic banking. Next slide. So very quickly, one of the instruments that could be effectively used for development of Islamic banking in Africa is Sukuk, which is Islamic bonds that can be essentially used by the African continent to essentially advance the cause of infrastructure funding on the African continent. And you find various governments like the Ivory Coast government, etc., that have used Islamic bonds effectively to fund their infrastructure requirements. So what are the differences between a Sukuk or an Islamic bond versus a conventional debt instrument? So each Sukuk will represent an ownership of the underlying asset. The maturity of the Sukuk corresponds to the term of the underlying project, and the Sukuk prospectus contains all the Sharia rules related to the issue. The underlying asset has to be Sharia compliant. The Sukuk manager is required to abide by Sharia rules, and the Sukuk holders have the rights to profits, but also bear losses. Now, if you look at conventional debt instruments, the bonds represents pure debt obligations due from the issuer. The core relationship is a loan of money, which implies a contract whose subject is purely earning money on money. The issue prospectus does not include Sharia constraints, and the underlying asset can belong to any sector. It can be issued to finance almost any purpose which is legal in its jurisdiction. The bondholders are not exposed to losses on the asset, although they might bear losses in the event of insolvency by the issuer. So these are some of the fundamental differences now between an Islamic bond and a conventional debt instrument. The Sukuk industry last year was worth approximately $160 billion. If you look at the total Sukuk outstanding in countries like Saudi Arabia, which is close to the $300 billion range, Malaysia, which is $130 billion. The Islamic Sukuk or bond industry in Africa only constitutes 0.5% of the total Sukuk industry. So definitely a huge opportunity for the African continent to use Sukuk as an effective mechanism to fund infrastructure projects on the African continent by sourcing capital from Muslim countries in the Middle East and elsewhere. Next slide. So this is an example of what a Sukuk looks like. And very quickly, we'll go through it, is that you'd have a Sukuk SPV that could be a trust or a company or any corporation that then issues the Sukuk bonds or the Sukuk notes to investors who invest into a project, which is a musharaka. Then you have an originator who is the management agent or the promoter that would partner with the investors in a project. And at the end of the term, after paying out dividends on a yearly basis, for example, to investors, then the investors are exited out and the originator then controls the project. So this is in essence a musharaka sukuk. And an example of a musharaka sukuk is, for example, an investment into a property development. So for example, if one person has a land as an asset, but they don't have the capital, so they could use a sukuk to raise capital to fund the development. Next slide. So this is an example of an Islamic impact sukuk, where non-profit organizations can benefit from sukuk to be used to fund social projects to alleviate poverty, etc. And the government can also be a part of these impact sukuk, and investors can also benefit from that also. Next slide. So this is an example of or a snapshot of fintechs. As you can see, you have financing fintechs, asset management fintechs, payments, and other fintechs. So different forms of fintech organizations, in terms of how fintechs can be used to disrupt the financial services and banking sectors across the African continent. Next slide. So this is an example of or a snapshot of the Islamic fintech marketplace. Next slide. Next slide. So as you can see, fintech in Africa holds a huge opportunity with various fintechs in different countries, and we could use these fintechs as a base to then develop Islamic financial services and Islamic banking products. And a simple example is if one could take, for example, like Safaricom or M-Pesa, for example, in Kenya, develop an Islamic product that is then distributed to the market in association with M-Pesa or Safaricom, then that could be a service to the Muslim community. So with that, I'd like to terminate the first session of today's discussion. And now hand over to Emil in terms of question and answers.
Indeed, thank you very much, Ismail, for that. I think what I will do is maybe just stop this on this. You think you might refer back to this? We can always share it again. So I'll just do this, stop the sharing for now. We've already had a question, and I think we've added in before, Ismail. I think we alluded to this now. It was in your presentation as well, and the question was referring to cryptocurrencies. It's like Bitcoin, which is not asset backed, be Sharia compliant.
Correct. So when it comes to Bitcoin and cryptocurrency, we are currently doing a lot more work around or research around crypto. But in principle, there are two important considerations from a Sharia compliance perspective to look at crypto being a potential Sharia compliant asset. The first is that, does it have what is called qadar, or can it be considered to have a valid form of value from a Sharia compliant perspective? Or in other words, is it considered to be al-mal mutaqawwam, or can it be considered to be being an asset of value? So when we look at what is considered to be al-mal mutaqawwam in Sharia, we look at what is called urfan hada. That is it considered from a societal and institutional perspective to be an asset of value or not? And the answer is yes. If someone had to purchase a Bitcoin, they would be prepared to pay to get the Bitcoin. Right? So this is an example of Bitcoin. Now there are various other cryptocurrencies, etc. So this is the first consideration. The second consideration is that, is it considered to be a thaman or a valid medium of exchange? Now this is a gray area in terms of what we consider to be a valid medium of exchange or not. And according to various scholars, contemporary scholars, we cannot consider it to be a valid medium of exchange for various reasons. However, you find that in the markets of Baghdad and in Iraq, that you had what is called fulus, or fulus in Africa, which was an unofficial tender that was used by the traders in the marketplace as a valid medium of exchange. Although it was not officially recognized as tender, it was considered to be fulus or fulus that was being used as a valid medium of exchange. Now, applying qiyas and analogy, it could potentially be that a Bitcoin as a cryptocurrency could be a valid medium of exchange, and hence be classified as one form of thaman. However, that is a gray area which requires a lot more research. And then lastly is that we need to also look at the underlying activity of this asset of value. Now, is that underlying activity Sharia compliant or not? Now you find certain cryptos that do what is called staking, where there's interest earned on placing a stake, for example. Or I recently came across what is called a pancake swap, and I actually thought I was in a baking class, and until I realized that you could have a pancake swap for a cryptocurrency. So it just gets more weird. You have a proof of stake, which is a POS. You have a proof of work, or POW. So these are all new terms that are coming out there. And what we need to ensure is that if we're looking at each and every cryptocurrency, we need to look at the specificities around, or the underlying activities of those cryptocurrencies. Like where there's like a pancake swap or a proof of stake, where there's interest paid as rewards, for having a crypto, then we need to look at that much more carefully to say and analyze the underlying activity of that crypto to ensure that it is Sharia compliant. And more importantly, to all of these considerations, from a Sharia perspective, is we look at it from what is called saddan lil bab, or we look at the broader societal context of issuing a ruling of permissibility or impermissibility. So sometimes, in order to close the door for fitna and abuse, right, market abuse, the ulama and the scholars can also decide that something may be permitted but it could also lead to gambling. It could also lead to market abuse. So in that instance, then, that we should advise caution. So what we would advise for now is that each crypto needs to be looked at individually. For Sharia compliance, they should be screened by a suitable and qualified scholar to ensure that it's Sharia compliant. But we should adopt caution with regards to this, because as much as it doesn't have official recognition from governments and central banks, it's very possible that these things could be a source of market abuse as opposed to actual investment. And when you look at the Sharia and the sustainability of Sharia compliant investments, in our view, it goes against the sustainability of Sharia compliant investments, because if you're investing into an asset of value, that asset of value must be something stable. It must be something that produces value. Now, this is not a fundamental requirement for an asset to be Sharia compliant, but it is certainly an inherent trait as part of the maqasid of Sharia, that when you look at Sharia compliant investments, you would invest into an agricultural producing asset like a farm. You would invest, for example, in real estate, etc. Now, these are assets there that are providing a broader societal value in terms of food creation, food security, etc. Now, when you look at cryptocurrencies, etc., it is almost a form of gambling, albeit in a legitimate manner. So we need to look at all of these broader considerations, as opposed to just looking at the legality or illegality of something, or the Sharia compliance or the non-Sharia compliance of it. Because at the end of the day, we need to ensure that if we are issuing a fatwa, that fatwa promotes good, it promotes stability, and it promotes sustainability from a maqasid Sharia perspective also.
Thank you for that. Excellent. Maybe a question from my side, just in terms of, I know we've together worked on a number of projects from a funding and a Sukuk point of view. Infrastructure, I mean, that's always in Africa, there's a massive need for it. But, if you look at critical transport infrastructure, you need obviously power to drive factories. There needs to be power available for investments to occur into whichever sector. When it comes to transport, it's a bit more difficult, because at least for power, there's an off-taker and somebody's, in theory, paying for the power at whatever rate. But when it comes to transport infrastructure, and that's critical, especially from a food security point of view, where we need that infrastructure to get produce from farms to markets, to factories to be exported and so on. But typically, transport infrastructure doesn't have really a business case in terms of there's no, it will never make sense to have toll roads for farmers. You could have maybe some large scale, where there's volume is at scale, but moving, large quantities between major centers. But again, rural areas always gets neglected. So how do you fund that from an Islamic point of view? Is there, we spoke about, I think, briefly about it in the past, but do you have a business case where you can talk about, how would you get funding for basic infrastructure projects, transport, for example?
So that's a very good question in terms of the economic question around infrastructure projects and investment, or suitability for investment from a Sharia compliance perspective. So when we look at the economic viability or Sharia compliance aspect of it, there is an inherent value that is being developed by developing these infrastructure projects, whether it be roads, whether it be hospitals, whether it be clinics, etc. So all of these projects have an inherent societal value at large, and this, in actual fact, should have been absolved by the state itself, had all of the individuals or the citizens of the state paid their relevant taxes. And in Islam, we have what is called the zakat, which is an obligatory arms of 2.5%. So, so if the state had done its duty itself, this would have been an obligation of the state to fulfill. However, because of fast-tracking development, that the state needs to partner with other institutions and investors to then fund these infrastructure requirements. So there is two elements of this. The first is that there is a broader societal economic aspect where through the development of a project that the society is financially beneficiated through providing services, providing products to those projects. So they get paid, and then those funds could then be used by them to invest in businesses, etc. So this is the first element. Second element is that through the adoption and creation of these infrastructure projects, it opens up new horizons for businesses to expand, for communities to expand, etc. So, and a simple example of this is if you look at the Emirates Airlines in the UAE. Emirates has been a fantastic project for the UAE government to draw and attract people from all over the world to Dubai as a hub, and the entire city of Dubai and the broader UAE benefits from all of those people that travel and use Dubai as a transit hub, because typically they wouldn't simply stay over in Dubai. They would, spend a few days in Dubai, spend money on tourist attractions and maybe even do business there. So these infrastructure projects should not be seen as being an indirect driver of economic growth. It is, in fact, one of the major drivers of growth, albeit the responsibility of the state. But in actual fact, it should be a broader societal responsibility where all of the citizens of the society at large consider this to be a pivotal and important factor for the development of business and economic activity.
Okay. Thanks for that. I appreciate your time and your effort, Ismail. It is already 2 minutes to 3 o'clock. We started a couple of minutes later, but we don't want to take too much of your time. Thank you very much again for the session. We look forward to next month's session, looking further at Islamic finance, and hope to have you here in Dubai at our PPP event in September. And thank you very much for attending today's event.
Thank you very much, Amir, and thank you to all the attendees for your time today. And inshallah, we look forward to our next session.
Thank you very much. Have a good day. Goodbye.